Good morning. This is Vance Williams out of the Seattle, Washington area here in the United States. Welcome to my morning Forex trading show. It's Tuesday, November 25th. Because this is Thanksgiving week, I'll have one more show tomorrow. I think we have an incredible development I'm ready to talk about today. I'm going to say that we probably have our first long-term view in place now, and I'll talk about that. I just wanted to cover very quickly, and let me go ahead and show one of my screens here. When you join the show, make sure when you click play, you also click be part of the conversation. And when you do, you'll be able to see these links and anything else that I publish here. You can click parts that you like if you want. But the main thing is you can follow me on Twitter here, and you'll find out when I'm hosting shows. I don't host them at the same time every day, but if you follow me on Twitter, you'll get a message, a few minutes before the show telling you what I'm going to be talking about and when it's going to be happening. And the nice thing about Twitter is you can program it easily to text you on your phone. And that's the only things I usually tweet. If I have a really relevant story, I might tweet it, but it's usually just the shows Monday through Thursday. And here you can go to forexartofwar.com. And a couple things you can do is one is you can get 8 things they don't tell Forex traders. We've had about tens of thousands of downloads of that. People love that. That explains why people fail in Forex trading. And then there's my other book you'll get with that as well, The First Battle. Also, be sure to check out training options. Our memberships has been closed off for about 6 weeks or so. Check these new packages out that we've been offering, and let me know if you have any questions or if you have any feedback. All right, so let's get out of there. And okay, so before I start, I want to stress that what I do in this show is for your educational purposes only. This is not intended as investment advice, and even if you see me nailing this over 90% of the time, don't take trades based on what you hear on the show, because you also have to be able to manage your risk very well, and you have to be able to execute well. Managing the risk isn't that difficult, but execution is something we're just not trained for in ordinary life. So, I wish it were as easy as most people think it is, but it's also not as hard as most people think it is after they've tried it for a while. You just got to know how to do the right things, how to practice the right things. Okay, in fundamentals today, we've been doing intraday trading. This is my price logic trading, where we use only human behavior to read price movement with great accuracy. So we've got our intraday movement. This is our movement anywhere from in ranges of 18 to 40 pips. We've been doing that for years, even when times were incredibly uncertain, where we didn't know what was going to happen to the world over the next 2 days. And that went on for actually a few years. Now, this past September, we got medium-term trading, and now it looks like long-term trading is emerging, and we haven't had that since about 2007. Now, just as a little brief history, in 2011, the central banks, of course, we know about the crash in 2008. Dodd-Frank passed in 2010, trying to regulate banks. In 2011, the central banks basically vowed that they would not let any currency depreciate, basically doing away with competitive currency markets. That was kind of tough, the hard pill to swallow, but we made it through those times. Then the pound was the first currency to break rank, and that was last February 2014, and it broke out of a weekly range. It was locked in for 5 years. Let me just show you that real quickly here. Let me bring up pound weekly chart. Let me zoom out a little bit. This was that range that it was locked in for about 5 years right here. And you can see, I made that a little bit too big. If I zoom in, you can see when that happened. This is the first time in 5 years that this happened. It broke out, and then it really went. And then the central banks managed to get it back down in here. Okay. So that was around February of 2014. Now, what happened last summer, just this previous summer here, is the markets almost totally stagnated down to a crawl. Now, what happened after that is in September, the central banks could not hold price back anymore. The U.S. economy was looking very strong compared to the Eurozone. There was a couple of sputters, but that began an 800 pip run down since September. The fundamentals were so clear that this created what we refer to as medium-term trades. This is basically a 6 to 18-month vision. In other words, we can kind of get a feel for what's likely to happen 16 to 18 months out, and that helped us to trade the right circumstances for gain to 100 to 300 pips. Prior to that, we were locked into, for real, about 100 pips for years. Now, I call this a vision of 6 to 18 months because fundamentally nothing has actually changed. All of this is on the perception and expectation that the United States will hike interest rates before the Eurozone. Now, as this began, talking about the euro drop and the dollar gains, something else different began to take place. Big investors began to unwind positions that were on to help manage the global risk for all these years. This caused oil prices to fall, gold prices to fall. And then most recently, Japan made a big move to depreciate their currency, introducing a crazy amount of quantitative easing. That's code word for printing money. And this probably set into motion a few years of the US dollar gaining against the euro and the yen. And what I want to point out there is this is, the Central Bank of Japan breaking away from a world agreed upon central bank policy where they're working together to stabilize and save the world, right? This is them making a major decision for their own future. And again, this is pointing to global competition. This is what we've been waiting for. So I'm going to say for the first time, we have a long-term trend as well. Again, we have the price logic trading. That's the intraday precision we developed when the outlook was changing from day to day. We have medium-term trades where we could possibly get 100 to 300 pips. And I think now we have the long-term trade reminiscent of the position trades that we were taking in 2004, 5, 6, 7. So this is a huge development. I've already been teaching medium term, and I'm starting to teach position trades. We're pulling these tools off the shelf, but keep in mind that medium and long-term trades are almost totally fundamentally driven. That's basically the outlook of the economies. So where and when you get in is the key. Now, last thing in fundamentals, I also want to point out that Goldman Sachs came out today with very strong predictions of a stronger U.S. economy. And the last thing, we also have the gross domestic product data coming out at 8:30 a.m. Eastern time, probably just after I wrap up this show. So that's at the bottom of the hour coming up. Okay, in major bank trades, I wrote in last night's high impact data that investors, including me, are itching to sell the euro. I also talked yesterday about, what the risk factors were right now. But also on yesterday's show, I showed that two of the most successful major bank traders were looking to get in here. If you look at my mouse at 2467, right in this area and right in the area of 2501. So they were looking to get in there. And I also said that last time they tried this to manage to hedge their risk, price left without them one time, stopped them out the other time. So but nonetheless, I understand this. If we're going to get in a position for the euro selling, I want a better price too. I want to get my stop. Let me see if I get this up. I want to get my stop above this range. So I want a better price like they do. So I get a shorter stop, more gains. It's just, with Thanksgiving week coming up on Christmas, wrapping up the 2014 here. All right. So, looking at what the major banks have been doing today and yesterday, they're mostly managing stops and targets, seemingly not aggressive at all. We're just one day away from the big Thanksgiving holiday after today. So, that's kind of where we're at. All right, so let's talk about price. I'm going to talk about the euro first. Zoom in here. Really, we're looking at something almost no different than what we were looking at yesterday, except for the sellers are probably getting just a little bit enthusiastic right in here because they see how this area has been rejected by sellers over and over again. And so, this is not going to give any confidence for the buyers here. But again, we'll be selling at the bottom, like I talked about yesterday, if we get in now. So we're just kind of sitting there. I mean, they're probably waiting for GDP data coming out. I believe there's some more data coming at 10 a.m. Eastern time. So they might just be kind of on pause. I mean, so much of the market is itching to sell, but keep in mind that anything can happen. Now, if you're going to think about buying this, you want to see price move above 24.42. Me personally, let's see, selling. Let me zoom in a little bit on that. I hadn't thought about. We've had a little bit of a cross there. We can actually look potentially at selling from here to here. There's 54 pips of range. So if these cross over and move down, let me see where I think the key level is going to be. I'm going to say it's right here. Okay, so we're looking basically I'm just looking around here, and it's basically 2,400. So there's going to be a little bit of buy order sitting in this area, but if this decides to go and you can get in and out before you reach this level, that'll be important because there's going to be some buy orders sitting in this area. So we're all looking for that next leg down to 122, 122.50. I mean, some even have their sights even lower right now. It's just a question of where to get in so that you can manage your risk and optimize your profit. Moving over to the pound. The pound, when we were on the show yesterday, we were looking for the pound to break above this level, which it did, and it set up a small trade here. And then we had the supply line on here showing where this resistance and support was likely to be. And if you look, I'm gonna see if I can I can't get that. Let me get that green thing out of there. Let's see, right there. Okay, so you see how this holds and holds right there. Then it comes down, it holds again right here. And then it kind of holds right in this area too. All right, where we're at right now with price is what I'm seeing. And you would have been seeing this definitely for the past 2 hours, is the intraday sentiment is bearish. And I'll tell you why. You see this? This is lower highs and lower lows. And lower highs and lower lows, that's just a symbol. What this is really showing you is that over time, the sellers have more downward pressure than the buyers. That's the behavior that we're seeing right now. All right, so what might we look for in terms of a trade? We've already got the volume shifted over to the sellers. You can see there was a lot of buying interest right in here. See that? So there's some buy orders sitting in this area. But if we were to ignore that temporarily, I'm going to say that we want to see price stretch out below 56.62. Keep in mind, there's probably some buy orders in this area. So if it does make a move, probably you would want to manage that risk of these buy orders by getting a little bit better price. On the top side, I'm going to just keep it real safe here and say that, if you're going to play this, you want to see a move above 57.11. Okay, I did want to show a little bit on the Australian dollar and the Kiwi because they've been on the move. You can see these nice trends continuing down, dropping down to a 5-minute chart so we can see the actual behavior. Watch my mouse, clear price move, pull back, another push, again, clear price move, pull back, another push, again, clear price move, pull back, another push. And each of these ranges were actually pretty good. This one's 21. This one is 29, showing you getting stronger. So this is the one that was really likely to go because you have an expanding strength. And this one shows even stronger. It makes another push, makes a little push showing you that it's weakening, and then we get the correction back. So there were some trades there. Let's go over to the Kiwi. That's the New Zealand US dollar. And it looks like we potentially had something here. I don't think I looked at this one. Got to let it load a little bit here. Yeah, it looks like we had something right here. Yeah, 30 pip range of advance. If you don't know how to draw these fibs correctly, I developed this technique, so you probably won't learn it anywhere else. Just go to my website. I think I've got too many pinned posts up right now. I need to take down, but you'll see a blue spiral picture, and it'll say Master the Fibonacci. It'll show you how to do this. So there was potentially a trade right here as well. This move here is what we would have been looking for. Something here. We tend to always wait for a better price on this pair of 50% or 61.8, and then you see the push. Not to break the low, but just to, in that area. It did move lower, but this is where we would be targeting. So just want to say one more time, if you go to my website, you can download my books right here for free. Be sure, I don't have that screen up anymore. Oh, there it is. Be sure if you're watching, joining the conversation, you follow me on Twitter so you see when the shows are going to happen. So a lot we covered today. I will be back tomorrow morning, I expect, for another show. And you guys have a great day, and I hope you got just one idea that helps you with your Forex trading goals this morning. Thank you.